right? The remaining will be in that.
So you're saying agro will be 75?
But no, agro will not be 75. Agro is 65 this year, and it should get little lower because pharma's growth will be higher than the agro's growth, and so would the polymers growth be higher than the agro's growth, and that is where I'm saying that pharma and agro will be 15. Pharma will be 15, and agro will be other specialty polymer will be little on the double-digit side. So you may see that the personal care may go down by a couple of percentage points, and agro will give up on a few percentage points in my portfolio. But on an absolute side, I don't think too much will be changing in terms of agro and personal care.
Yeah. So 65% is agro, 9% is pharma and specialties now. That is about 74%. So balance, out of the balance, 25%, how much is it now? Or where does that come from?
Let me make the statement again. Agro is 65. Yeah. Personal care is 17, pharma is 9, and other specialty including polymer is 9 today.
Okay, so personal care is 17, pharma is 9, and specialty is 9. Okay. But then you see the pharma and specialty is growing faster. Understood. So when you see this kind of growth, and when you see this kind of growth, and you are talking about the share of fluorination increasing. So what is the share of fluorination in FY24? And how does the share of fluorination move in the next 2 years, 25, 26?
So fluorination is around 20% in FY24, and that would grow further. I don't want to guide today in terms of absolute number, but it will grow by at least 5 to 10 percentage points. Is where I'm looking at.
And this will be mostly in pharma, right?
No, it will be across polymers, across pharma, and also agrochem, because fluorination is used. See, I'll tell you what we try to look at it from a segment to segment point of view, Ramesh. But if you really look at it, what am I doing? I am doing a very simple thing. I have a value chain. I work on that value chain with my chemistries, and then it goes into the end markets like agro. Largely, it has been historically agro, but now I am now moving into if I do couple of more steps, I get into pharma. If I do couple of more steps on the side, I get to polymer. And with fluorination coming in, my repertoire has expanded, and that is where it is coming to. So it's a single differential that we are talking, but if you really look at it, it is purely a whole value chain that is playing out, and then that's where we would have to see for ourselves, because my fluorination goes in all the three applications.
Okay, so just to round up this discussion, to interrupt, sir, may I request you to rejoin the queue as there are several parts?
No, it's okay. Let him ask this question, and then we can discuss.
So please go ahead, sir. In terms of your operating cash flows and growth from the new products and the movement in debt, how do you see the net debt for the company, say in the next 2 years, which can possibly offset this this relatively higher working capital you're going to have? So can you shed some light in terms of your thought process on how your operating cash flows help you reduce debt and manage your overall balance sheet to a reasonable size, even with a high working capital, so that your ROC can improve?
Sure, Ramesh, it's a fair question, and I think let me answer it in a different way, because I don't want to guide to a specific number, because that may not be the right way of doing it. But let me give you directionally and a thought that the management has in terms of it. One, whatever working capital we have today, we should be able to do at least a reasonably higher number of revenue from the same working capital, and in fact on the receivable side we may be able to improve better here. So if you look at it, the simple thing that can happen is that, do I need any more work? See, capex I'm practically done, right? So I don't need any investment in capex for next 2 years. So that is one thing which is solved for. Second, if you look at, I have invested significant amount in working capital, which will be utilized for my next 2 years growth. So if you look at it, next 2 years revenue or the EBITDA and should be practically getting free cash flow in that sense. And that EBITDA less the tax and interest would be a free cash flow for me, and that will be used to just reduce the balance sheet size in that sense by reducing the debt. And also please be mindful that I have the pref and warrants money which will come in next 12 to 14 months time, which will be also used to pay the debt, especially long-term debt.
Thank you. I'll join back to you. Wish you all the best.
Thank you. Thank you. Thank you.
Thank you. We have our next question from the line of Krishan Parwani from JM Financial. Please go ahead.
Yeah, hi, Vishal bhai, thank you for the opportunity. Couple of questions from my side. First is a clarification on the capex. Sir, did you mention 190 crore of incremental capex you would incur during FY25?
So I'm saying that no incremental capex in terms of anything new that we are going to do. I'm saying that whatever was committed, which is the 670 crores of capex, part of that which is left out for the completion is going to be used to pay out to be executed. That's all. Nothing like any additional new capex we are announcing.
Yeah, I mean I meant incremental.
Yes, it's 180. It's 180 then.
180.
Which is sitting in my cash today.
Okay. So you would be utilizing that cash towards the capital. I mean,
exactly.
The capex, correct?
Exactly.
Right.
So if the question is, do I need any external financing for that? Answer is no.
Okay. Secondly, the 1,600-1,700 crore revenue guidance, that is on the standalone capacities, correct? And that's not in FY25, but in totality, it can give you the 1,600 crores revenue. Is that correct or no?
Yes, you're right. That's exactly what I was saying. That my capacity that I have today can support a revenue of 1,600 to 1,700 crores. Not that I'm guiding you for that. Absolutely right. Thank you for helping me clarify that.
Yeah. Otherwise, I think it would have looked more like an FY25.
I would love to have that number, but I would not guide for that now.
But do you want to give any guidance for FY25 in terms of range, particular as in on a console basis?
Okay, let me answer it in this manner. Will this be a year of growth? I believe the answer is yes. But what is that number? Give me a quarter or so to do that, because we believe that the first 2 quarters are looking. We look at a headwinds for that, and the third and the fourth quarter is where we see a decent growth. Especially if you look at it, agrochem is one that is there is a headwinds coming in. My polymer and pharma will contribute, and that will contribute to the growth. But the net effect is something that I want to see for a quarter or two before I guide that. I hope you will be patient with me on that.
Sure, sir. No worries in that. And 2 small clarifications, if I may. So on this working capital front, so if ideally we should be looking at the standalone inventories, I think which has gone up to 990 crores or in days of sales 321 days. So just can you please give breakup of that raw material, WIP and finished good inventories for the standalone business for this financial year?
Sure.
If you have it handy.
So raw material is around about 30% of my product. My WIP and FG will be the balance. So if we can answer that offline, because I don't have it ready right now to answer that, but I can get you that offline on this.
Sure, no problem. And
or let me check if I can get you during the call. I'll get.
Sure. And lastly, if I look at the standalone receivables, which has increased by almost 170 crores. So and while our standalone sales have declined, so if that wasn't for the higher receivable, the actual top line would have declined by a much higher number. Is that understanding correct?
It's a chicken and how you see it, right? There is a bit of my customer also have some obligations to take off a particular level of volume from me, right? Now I have a choice to incur higher pain to them or a lower pain to them, okay? Because they are also in a difficult situation as of now, right? So one way is to say that I want this volume and in this terms only that we have agreed upon. Or to say, okay, fine, I'll also take a bit of a pain for you as you are also taking a pain. And that's where we have a compromise. We are saying that, yes, we will take the volume. They will take the volume pain and I'll take the receivable pain. So it's a business decision. Is it a one-to-one relationship or not? I don't think so. It is about one-to-one relationship. It is purely how you work with your customers, especially high-quality customers who are really working with you for so many years. You would tend to do that for them, and that's what we have done.
Understood. Thank you, Vishal Bhai, for patiently answering my questions, and wish you all the best for FY25.
Thank you.
Thank you. We have our next question from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yes, thanks for the opportunity. So first question is on the standalone. So sequentially, we have done pretty well. There could be a seasonality impact as well. But given that it's a start of calendar year for most of our exports customers, and they will be starting the year afresh, given that last year we had inventory issues, etc. What is the kind of dialogue that we are having? So whether they are they are relatively confident in terms of lifting up the volumes, given that last year those volumes were impacted because of inventory drawdown and they were taking only the minimum quantity. So what has been the dialogue, particularly from the agro perspective, given that the other segments we have already mentioned that there is a strong growth expected going ahead? Thank you.
So Rohit, let me answer this. You are right that the Q4 has a reflection of the seasonality also, and bit of a little strengthening than the last quarter. Yes, there is a bit. But are we saying that we are out of woods and agrochem cycle has now started picking up? I would put it that I would be having a very cautious view on that. That the first two quarters yet looks little not very buoyant. I would be far more comfortable and confident to say that their CY and my FY25. So their CY25 looks more. I'm more confident on that than the CY24 of the international players. However, it's little early in the day for me to really comment on the full year for them. But I would say that I would be cautious for the first two quarters before I really say that the demand has come back strongly. Is there a strength? Maybe there is a bit of a strengthening, but I would wait for 2 quarters, honestly.
Fair enough. Second question is in terms of the LOIs. So out of that 9,000 crores of LOIs, how much was the contribution in FY24? And if I'm not wrong, earlier for FY25 we expected close to about 400 crores. So does that guidance remain? Thank you.
Perfect. So let me divide this LOI piece into two different parts, and then we can talk about it, and I'll answer that fully for you. LOIs to get commercialized, we will take it 18 to 24 months kind of a time period. And two is typically once you commercialize it, it takes you another 18 to 24 months, or 24 plus or minus 6 months kind of a time period for a full ramp up in that sense, because the volumes take its time to ramp up fully. So if you look at my the LOIs and contracts that I signed in 2022, they have started yielding revenue. This year we should have done little less than 200 from the LOIs and contracts, and next year it's just it should do reasonably well. Will it be? It should be in the range of 350 plus or minus 25-50 crores is what I would look at for those numbers.
Sure. And just one last clarification. So when I understand you don't want to give a guidance on the top line front as of now, but given that the raw material prices have alleviated, stabilized, so would our margins will be in the range of 26 to 28% as we had guided earlier on standalone basis?
Margins, I think we should be looking at around 26 or 26 plus % kind of a thing, right? So what we have been guiding is 26 plus is something which we should be looking at.
So and any guidance? Yeah. So any guidance on FY25?
Just using some humor here, that's all.
No worries. Just any guidance on FY25 and working capital days that we want to put up as of now?
Give me 2 quarters. It will cover this for sure. I assure you of that. Give me 2 quarters to answer that. At least a quarter or 2 to see how it is moving on. Because I'll tell you why I am saying though. So because my revenue mix is changing significantly, and the velocity that I am expecting from the aging cycle to come back is something that I want to see before I really commit on that.
Fair enough. Thanks a lot and best of luck.
Pleasure, yeah.
Thank you. We have our next question from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Yeah, just a couple of follow-up questions. One is in terms of the number of shares you reported in the filing, does that include the number of shares equivalent to the warrants, or for dilution should we take the entire conversion of warrants at 39 million?
So number of shares does not include the warrant shares, and so you should count for the dilution in that.
Okay. Second thing is, now somebody asked this question on the share of revenue from the LOI. So how do we look at the impact of the bunching of some of these orders getting executed? Maybe 3 years down the road, say 27 to 30, if you take a 3-year view beyond 26. What would be the kind of run rate in terms of revenue addition from the order book you have as of date?
So Ramesh, let me put it this way. I would not want to say that. Let me tell you that. Let's say we have a 9,000 crores of little less than 9,000 crores of order book, right? So if I just divide it by even 6 as an average, because there are some at 7 years and some at 5 years, 9,000 divided by 6 would be in the range of 13 to 1400 crores of number. And that's the kind of a number that you should see. But also you have to be mindful that there are some which would have started in 2023, 24, and they would be tapering it off at that point in time. But as of now, I would say that should have contributed 13 to 1400 crores of revenue from there.
Okay, that's a delta from the new orders, right?
From the day it started. So you have to say that some of it has been reflected in this year's number also, and I'm talking about total like that.
Yeah. Plus what you will get the revenue from the current portfolio, which will continue to run, net of whatever is happening.
Exactly. True. Yeah. So current portfolio will expand. There are LOIs which will expand, and then also my pharma and polymers will also have their contribution. So yes, true. No, but this is not the only delta. This is not the only delta revenue that we will expect.
So, but pharma and polymers will be part of these LOIs, right?
Some of them, not all of them.
Okay, that means you're saying there will be sales outside the LOIs. It's an annual business.
Yes, it would.
Okay.
Yes, it would.
Okay, fair enough. Thanks a lot. Wish you all the best.
Thank you. Thank you, Ramesh.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Madhav from Fidelity. Please go ahead.
Yeah, hi, good evening. I just had one question on the working capital side. So I remember the last couple of years we've been highlighting that we want to change the pricing contracts for many of our customers. I think it seems to be a yearly contract for 6 months or lower. Could you help us understand, from the IPO time 3 years back to now, what % of our customers or revenues have shifted to a lower sort of pricing duration? If you could help us with that. And also just curious, if we have 320 days odd inventory in the standalone and 70% is finished goods, so we're carrying 200 days of finished goods inventory on the balance sheet. Just wanted to understand why are we carrying more than 6-7 months of inventory of finished goods on the balance sheet? Just trying to understand the sort of thought process there. Thank you.
Okay. So Madhav, around 60 odd % is coming from the 6 months kind of a contract, 6 months pricing kind of a thing. And when I said 60-70% of it is not only finished good, it is finished good and WIP. I was talking about 30% from the raw material and balance is WIP and finished good. And that's put together it is that. And just to give a little flavor on that, there are products where we have a multiple steps that we do around anything between 8 to 12 steps. or more, and there each of the steps you will have a particular level of inventory which is in the WIP that will be counted for. So that is the reason it is there. The exact details I can share I don't have it handy, but I can share it which is what I can.
The 60% revenue which is from the 6 month pricing contract, how much was this like during the IPO time, like 3 years back? What was this number then?
At IPO time, if I remember, the number was 15 to 20%, which we have now gone up to 60%. But mind you, what has happened is that another thing is that because of the kind of volatility that has been there, they have been insisting on holding higher, and that is what I'm saying. I think, but as we go, we want to go back to the numbers that we have agreed with them, which is where we hold lesser inventory and lesser working capital. And all the new contracts that we are signing, we are conscious of keeping it at a 6 months kind of a pricing rather than a 12 months kind of a pricing.
So just wondering that, given that... sorry, go ahead.
Yeah, please go ahead.
My question basically was that given that the customers have been destocking globally, this is like a phenomena across the agro value chain. Given that customers are destocking, why do we need to keep higher inventory on our balance sheet?
So I think, Madhav, the only thing I can say is three points, and let me put it in this way. One is, earlier we all were keeping it on the whole value chain. Now they have started destocking, but we have been keeping it, and we expect that this destocking for us will also happen in next few times, because see, customers will drive the first leg of the destocking, and second will come from us. So we are insisting, or we are keen on doing it. It's only that two things are happening. A, the slower growth means that slower destocking happening, and two is when your customer is destocking, your leverage to destock will be that much limited. But as we go, that number will have a better line of sight on that, a better ability to do that.
Okay. And so the pharma business, which is expected to go up, what is the working capital cycle there for that part of the revenue?
So there the inventory levels will be lower, but there will be a little bit of a higher receivable cycle, because in India, because that revenue will come from India, and the India working at data cycle is little longer than what you see in the international market. So you will see a little higher bias towards data, but on the inventory side you will have a correction. So net, I think we should be on the positive side rather than on the.
How different is it, sir? Broadly, agro, let's say our target is to be 200 days by FY26. Pharma is like at what level?
So see, pharma, I would put it. Let's say there is a 120 days of receivable. Let's say though we may write 90, but they may end up in doing it. Let's say 120, and I will have our 60 to 70 days, 60 to 90, 60 to 75 days on in terms of payables. So. And then inventory would be, let's say, 90 to 120 days. So I should end up around 150 or little less than 150 is where I would target for now. Initially, when I'm starting my business, little bit of aggression, and then you will try and work on that.
Okay. And margin profile is probably similar for pharma versus agro revenue for us?
So typically margins will be in the range of 25-26% kind of a thing. That's what we are looking at. It will be slightly a percentage point little lower, but today we are on the KSM side. So KSM we have a decent strength there in terms of pharma. Maybe a percentage point you may want to take it a little lower than the agro side.
Okay, good. Thanks a lot, sir.
The only thing I want to add is polymer may have an interesting play, but I don't want to opine on that for now.
Understood. Thank you. Okay, thank you.
Thank you. We have our next question from the line of Yash Shah from Investec. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, my first question was regarding the current LOI which we have. The LOI which we have of nearly 9,000 crores. have we basically witnessed any kind of dialogues with the customer wherein the customer has asked to, wherein there have been pricing renegotiations due to the overall decrease in the prices throughout the value chain?
So yes, you see, our model on pricing is very simple. We build it from a raw material to all inputs, and then say I want a particular level of margins. So that's where it is. So it's a very fluid. It's a very transparent pass-through kind of an approach. So for me, the key important number is EBITDA rather than my revenue. In terms of a contract, I'm saying, right? So volume is assured, margins are assured. Now the volume price revenue is the pass-through in that sense to me. So if the raw material prices increase, my revenue may increase a tad bit, and to that extent, the percentage of my revenue will be equal to my EBITDA, and same other way around. But so for me, we don't have that conversation of what is going to be the price. Do we renegotiate the price? Because that's anyways readjusted every 6 months going forward.
Okay, sir. Got it. Sir, my second question was regarding, again, you actually guided that the revenue from LOIs for FY25 should be in the range of somewhere between 320 to 370 crores. So far, as of FY24, we've commercialized contracts worth 2,700 crores. And for FY25, we had guided to basically, except for the 2,200 crore contracts from Japanese customers, so we'll be basically commercializing 4,200 worth of contract in FY25. Will you be able to provide a broad breakup as of the contracts which have been commercialized before this year and the ones which are going to commercialize in FY25? Of how are we basically expecting 350 crores?
So I'll tell you, so you can take that the FY22 contracts have been commercialized, and the latest one that we had signed is what we have commercialized. So these two these are the ones that we have commercialized, and now next year we may commercialize the other few of them which are coming. Other three which are the ones that we've signed in FY23, 20 or later half of the F24. Later half, the early part of the 24.
Okay, sir. That's helpful. Thank you.
Lovely. Thank you.
Thank you. We have our next question from the line of Siddharth Gadekar from Equirus. Please go ahead.
Hi, sir. I just have one basic question. When we look at our contracts, which are annual, given that in CY23, if a customer had indicated they would be picking up X quantity, by year end, how much lower was that offtake from those customers? If you could give a fair sense in any ways.
So if you look at it, typically there is an NGO and there is a forecasted volume. So typically forecasted is, let's say 100, then the NGO will be in the range of roughly around about 70 to 80% of that number is an NGO. And typically that's where we are talking about.
Okay, so basically it would be fair that the offtake was 20% lower than what the customers had indicated in CY23. Would that be a fair understanding?
Yeah, you can say around 20 odd percent. Yeah, you can say that.
And so suppose CY24, how has that number shapen up, like in terms of the customers? How have they indicated for CY24? Is it too early to give any indications? So even there, put that on hold?
See, that's what I'm saying. What I had mentioned, and I don't want to get deeper onto this because, there are a lot of moving parts here. But as I said, first 2 quarters look little tepid, and the next 2 quarters will be better. And overall, we expect that there should be growth. So I think that would really, indicate to you the kind of conversations that we have had with our customers.
Okay, and so for CY25 also, have we received any indicative orders from the customers, or that will happen once we are closer to the end of CY24, or CY25 looks a year where we will see a very healthy growth?
That I can tell you that yes, that's where people have been. So our customers have been saying that CY25 looks far better than CY24 for sure. And the CY24 looks better than CY23. Also is a statement I can say. And yes, the buoyancy on 25 is far more than the buoyancy on 24 compared to the previous year.
Okay. So just one last thing on this. So is CY25 volumes higher than CY23, or it will be in that same ballpark range on the existing orders, not on the new orders? Just to get a fair sense of how our customers are thinking.
It should. No, it should. It should be higher. It should be better. It should be better. We should have caught up. If that is the question.
Okay. So secondly, in terms of margins,
but please see, because I'm recorded and I want to make it clear that these are our estimates and expectations. Please be mindful of that.
Yes. So secondly, like in the previous comment, you had mentioned that we work on a percentage margins. So do we work on a per kg margins or a percentage margins? Because we've revenue
percentage.
So in an environment where raw material prices are moving up, our absolute EBITDA is technically much higher than what it should have been. Is that a fair understanding?
You're right, but see, you have to always understand that if you look at my raw material cost is what, 40% of my 35 to 40% of my revenue, right?
Correct.
So that translation is limited, and you will see over a period of a long term, over 5 to 7 years time period, that everything levels out. So yes, quarter to quarter you may see a bit of a up and down, but on a long term basis you will see that everything levels out for that. That's the business that we would want to talk about, and that's the business that we want to build. That over next 5 years, 7 years, 10 years, how does it look like?
Okay, got it. Thank you. That's it.
Thank you. We have our next question from the line of Rohan Gupta from Nuvama. Please go ahead.
Hi, sir. Good evening and thanks for the opportunity. So a couple of questions. First is on this, it's a Tenfec and our fluorination business. If you can give some sense, what is the current capacity utilization, and in FY25, FY26, looking at the current product pipeline, what kind of utilization level we are looking at?
So one, Tenfec, if you see, they had a capacity on the HS side which was 20 to 80% utilized, but they have gone up and expand. They are under the expansion phase right now, and the HS capacity will double by in next year. And hence, if you see, there is enough and more capacity available for us and also for Tenfec to supply to the market. So to that extent, the availability of HS and KF would not be a challenge to my mind.
No, sir. My question was other way around. That in HF, we still have some surplus availability, and are we able to sell in the market? What are the capacity utilization level for HF we have seen at Tenfec? I mean, is there market in HF right now? Because earlier Tenfec used to sell significant amount of HF to outside. How is the market now? And once we are moving up in the value chain, then what are the expected utilization levels for Tenfec next year?
So I think for Tenfec, if you see the volumes as per the plan has been achieved in terms of capacity. In terms of volume, if we were to talk about. Yes, there has been a little bit of a price movement here, but typically the volume side they have been able to do decent enough there. Do we see that there is a overcapacity? And today doesn't look like, because this year as we have started, the numbers look decent for now. But let's see how the demand pans out later in the year. Right. Because today also the capacity is limited for HS in the country, and the utilization is only increasing of HS.
Sir, second question on our agrochemicals. 60-65% of our business is still coming from agrochemicals, where we have been seeing that very less poor visibility as of now. Which even you are also agreeing that maybe first half may be slightly uncertain and things should pick up in second half. That is the expectation across the industry right now. Sir, with that, keeping in that mind, though we have been signing multiple LOIs, and a lot of LOIs were supposed to go on stream from, in this year in first half also. Do you see that from the client's interaction right now, which you are seeing, there can be further further delays? How the contracts are, have been chalked out, that in case of any significant delays, are we covered because the capacities have been invested? So are we covered in terms of client compensation, any of such things? Because our business over next 2 years is a lot of depend on LOIs. I'm just worrying and I'm trying to understand the risk associated with that. If any delays, how it will be panned out in terms of the compensation to our profitability.
So Rohan, let me answer it in 2 or 3 parts. First part is that if you look at it, I don't have any dedicated plan for any product or any customer. Okay, each plant has multiple usage and they are multi-purpose. And if you look at the product portfolio, I have a decently large and a spread out product portfolio. So to that extent, any one product really impacting my utilization or my revenue is limited to that extent. Their impact of that is limited. If you look at this year itself, I've launched 17 new products. Next year, I'm looking at another 6 odd plus products, 6 to 8 odd products. So if you look at it, total portfolio, if you look at it, I'm talking about 70 to 80 products that is there. Now, yes, there may be some plus or minuses on any 1 or 2 products that can happen. That may happen. I'm not saying that it will not happen. But that is also budgeted in and planned out. And 2 is also that the ability to impact my total capacity utilization or my revenue or my numbers is that much more limited. That is all I'm trying to say. And the third part is that are we expecting it to be inordinately delayed? Right now we don't see any. A quarter or 2 really doesn't swing into the game if you look at from a complete a broader perspective, and that's where I would put it.
So I was trying to understand more from the contractual perspective from the customers. I mean, if there are further delays, customer doesn't give the material maybe for another 6 months, 1 year, are we protected? Is there any take or pay kind of contract? That's what I wanted to understand, how the contracts are placed or written.
The contracts are take or pay. Contracts has a minimum offtake agreement, right? So that anyway kicks in. Now that always kicks in, but how you solve it is you have a multiple ways of solving it, right? I can ask for a compensation. I can ask for a bit of a price adjustment. I can ask for a different product. I can ask for a higher volume to compensate for it in the next quarters. So there are various ways to solve it because these are all long-term customers who are saying I'll honor what I have said, but let's find a win-win solution, and that's what we will always do that. But the question, if you are asking, is that am I getting compensated? Yes, one or the other way I'll get compensated. And contractually, I have a compensation clause that is there, and that I use it to get what I want. In fact, when I give one, I get 2 many times.
So that's it from my side. Thank you, sir.
Thank you, Rohan.
Thank you. We have our next question from the line of Meet Vora from MK Global. Please go ahead.
Yeah, Vishal, thanks for taking my question. So we mentioned that the peak revenue potential from current gross block will be around 1,600-1,700 crores. Now, including the fluorination block that we are putting in, what would be the total peak revenue potential that we are envisaging?
Yeah, so all put together, I think we should be in the range of plus 3,000 plus. Hello, sorry, I didn't get your question. Can you ask me again? Sorry.
So I was saying that currently we mentioned that the peak revenue potential from current gross block will be somewhere around 1,600-1,700 crores. Now, including the fluorination block that we are putting in the 670 crore capex, what would be the peak revenue potential from the combined gross block?
Okay, so first let me clarify on one thing, and that's the reason I asked you a thing, is that the new capex I'm putting is not only fluorination, it is fluorination plus other products also. So put together 670 crores is 3 plants, of which 2 are more supporting the fluorination and 1 is supporting the LOIs and other products. So when you add all put together, the revenue potential that I can generate from data, I'm not guiding for the revenue, but I'm guiding for the capacity that it can generate revenue. We should be looking at around about 3,000 crores of revenue, assume with the current kind of revenue mix that we are seeing.
And this would include the LOIs, all the LOIs that we have signed.
Yes. So I'm saying that all the products that I have today that I'm thinking about the one will be catered from these plants.
Correct. So say if at peak we reach somewhere around 3,000 crores, around say 1,300-1,400 crores would also be from LOIs.
Yes, you're right. Correct.
Sure. And also, in terms of the LOIs that we have signed, do we need to incur any new capex, or largely everything is done with this capex?
No. So with this CapEx, we are practically done with this plan.
Sure. And also just one last bit, what would be our our CapEx guidance for FY25 will be the balance CapEx that we have guided around 180 crores, and like FY26, 20
plus some maintenance CapEx, please.
Plus some maintenance.
Right?
And what would be that number for FY26?
It should be more on the maintenance side. I would put it at that number. Because I have right now no plan on the CapEx.
Sure. Understood, sir. Thank you, Vishal bhai. That's all from my side.
Thank you. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Vishal Thakkar for closing comments.
Thank you everyone for your active participation and your questions. We hope we have been able to answer all your queries. If there are any that are missed out, please reach out to EY, our IR partner, who will be able to help you. And we are happy to connect with you offline as well if there is any questions that you have. Thank you very much for joining and taking time out for us. Thank you.
Thank you. On behalf of Anupam Rasayan India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.